my IRA, an accredited investor. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. Welcome to another episode of AdBits. On today's podcast, I'm going to tackle the question of whether your IRA is an accredited investor. So before we figure out if your IRA is an accredited investor, we got to figure out who is an accredited investor. So we will tackle that right now. So according to the SEC, the Securities and Exchange Commission, the determination of whether someone is accredited or not is an important criteria because there are certain investments that require the investors to be accredited. And it's totally arbitrary. So I didn't create these rules. I think they're actually kind of stupid. I get the intent, right? The intent is to protect investors from their own stupidity, but hey, I don't think the government appreciates that most Americans are actually pretty smart. Even if they don't make a lot of money, we're a lot smarter than the government thinks we are. And these rules are really just to help certain types of lower or middle class income folks from doing more risky investments. And again, I think it's our money. We should be able to do what we want with it. We appreciate Uncle Sam for keeping tight chain around our feet, but you know what? It's our money. Let us make our own mistakes. That's my laissez-faire approach. But hey, these rules are there because they feel like there needs to be some type of fence around certain folks to make more riskier investments. And most accredited investor investments are investments like private placements, investments that generally get registered with the SEC, whether it's Reg A, Reg D, investments that are raising money from the public, like private placements, like private equity, hedge funds, venture capital, real estate funds, investment funds. Generally, only accredited investors could invest. The reason these rules are there is so that the promoter of the investment, the general partner, the private equity fund, hedge fund, they have less of a SEC filing burden in terms of disclosures if they're only selling to accredited investors. If they're selling to the general public, there's generally a lot more disclosures and it becomes super burdensome and expensive. So that's why a lot of these funds try to limit it to accredited investors to limit their disclosure and costs in setting up their private placement, which is generally an investment into a company or a fund or an investment fund. So who's accredited? Well, generally anyone who has $1 million in net worth, excluding primary residence, someone that makes $200,000 if they're single 2 years in a row, or $300,000 if they're married, filed jointly 2 years in a row. Who else? If you are a financial advisor, for example, you have a Series 65. If you are a general partner, a private equity fund, you're accredited. If you're in a family office, you're accredited. Entities owning investments in more than $5 million are accredited. If you have even LLCs or 501c3s, if you have more than $5 million of investment assets, you're accredited. If all the owners of the entities are accredited, the entity is accredited, and investment advisors, registered broker dealers are accredited. So again, if you look at these classification of folks, it's generally people that have some education, some experience in investments, and then folks that have a certain level of income. Again, it's totally arbitrary. Like I always give this example. If I went to Harvard Business School and I work at Goldman Sachs, and my salary is $295 because I'm married, filed jointly, and I don't own a home, so I don't have $1 million in net worth. It's all I have, a little bit of investments. I'm a smart guy. I work at Goldman Sachs. I went to Harvard Business School. I'm not accredited. How stupid, right? I'm probably smarter than 99.9% of the people out there, especially when it comes to investments. I went to Harvard and they won't let me invest. Dumb, right? And then they're going to let someone who never went to high school that made $1 million this year invest. Fine, let everyone invest, right? My strategy, and there's a bill that's floating around Congress, is make everyone take a test, right? You want to keep the 300 and $1 million, fine. Everyone else, if you want to be accredited, you have to take a course, right? Whether it's like getting a gun permit, a carry permit, right? Go take a course for 5-6 hours, sit around. Whether you have to pass their test or not, it's not my decision. Just sit and be present and learn about investments and risks. And then you're accredited. It's the way it should be. Right? If they're trying to protect us from ourselves, then let us get educated and then let us be accredited. It's a stupid rule. It's un-American, but it is what it is. We got to deal with it. So the way it works is pretty simple. If you're accredited, your IRA is accredited. Okay, an IRA does not have to have its own accredited certification. So your IRA doesn't need to have $1 million in assets. Obviously, it doesn't have salary. It's an IRA. It is all triggered off the individual IRA owner. So if it's my IRA, Adam Bergman has to have at least $300,000 since I'm married, filed jointly 2 years in a row, or I need to have $1 million net worth, excluding my primary residence. I have to have investments or own a business, whatever. They get over that $1 million. So it limits a lot of really cool investment opportunities like private equity, hedge fund, venture capital, investments that generally have very, very strong returns. Guess what? It's only letting the rich people do it. So how's that fair? So you're saying, okay, you don't make a lot of money, Joe or Jane. So we're going to protect you from yourself. But at the same time, we're going to kind of limit your wealth creation because we're not going to let you invest in all these investments that make a lot of money, right? If you look at the Fortune 500 list, top 100 people, there's a lot of hedge fund guys, private equity funds, real estate guys, investment guys. It's a big chunk of people. So we're basically saying these guys are all smart. They're all rich because they made a lot of money for their investors. These guys didn't get rich because they're just good investors for themselves. No, they've made people rich. That's why people invest and let them take 20% carried returns and 2% management fees because they're that good and they generally average and beat the S&P 500. So basically taking those investments off the table for low to middle income folks, saying, sorry, guys, you can buy fixed income or stocks or ETFs or real estate or gold or cryptos, but like all the private equity, private placements, hedge funds, venture capital, all that cool exotic stuff that has risk, but very, very high returns. Sorry, it's for the rich guys. Sorry, you guys can't do it. Only the rich people will get richer. It's a freaking crazy thing. It bothers me to no end. It's so un-American, these accredited investor rules. It's stupid. Makes no sense. Someone's knowledge of investment has nothing to do with their net worth. And we're smarter than the government thinks. We're not stupid. We know risks. Yeah, there are people that get fraudulently taken. But again, there's fraud in private placements, even if it's SEC regulated. We know there's fraud. So it's kind of a pointless rule. But from an IRA standpoint, if you are regulated as the IRA owner, if you are, accredited as the IRA owner, then your IRA is accredited and therefore it could be an accredited investor in certain investments. So there you go. I hope this was helpful. So I went on a bit of a tangent. This stuff kind of really bothers me, these rules, because it undermines, I think, the mystique of American greatness and kind of takes us as idiots. Just because you don't have 300 grand or $1 million in net worth, the government, the SEC thinks we're stupid. It's not cool. But those are the rules, and until they're changed, we got to live by them. So now that you know that if you're accredited, your IRA is accredited, you got all you need to know from this podcast. So I hope you guys enjoyed it. Appreciate you hanging out with me today. This is a weekly podcast. You can pick up anywhere you listen to podcasts, Apple, Spotify, wherever. Or if you want to watch on YouTube because you rather do that, like my kids, that's cool too. You can check it out on our amazing YouTube channel at IRA Financial. Don't forget to leave a comment, give us a thumbs up or a like, whatever you want, or good comments, bad comments. We take them all. Always strive to do better and bring better, more rich content to everyone. So all you guys can be better self-directed investors. That being said, have a great day and thanks for listening.